Agonized investors sent stocks plunging once again Wednesday. Two disheartening reports convinced Wall Street that a recession, if not already here, is inevitable.
We're going into bad economic times.
The first report, released shortly before the start of trading, showed retail sales plunging by 1.2% in September, almost double the drop analysts expected. Later in the day, a 1-2 punch from the Federal Reserve added to the sell-off. The Fed's release of the Beige Book showed that tight credit conditions were hurting businesses across the country.
I think the credit markets have seen some relief, but very slight relief. They're still looking toward the difference between the LIBOR rate and the Fed funds rate, indicating that banks are still very cautious about lending to one another.
About the same time, Fed Chairman Ben Bernanke backed up that report in an address to the Economic Club of New York.
Credit markets will take some time to unfreeze. And with the economies of our trading partners slowing, our export sales, which have been a source of strength, very probably will slow as well.
Stocks quickly tumbled following that statement and accelerated in the last hour of trading, wiping out most of Monday's record gains. The Dow Jones Industrial Average plunged 733 points to close at 8,578. Broader indexes also were pummeled. The S&P 500 closed down 90 points at 908, and the Nasdaq dropped 151 to end the day at 1,628. Investors apparently have come to believe that Monday's response to the government's plan to invest $250 billion in banks was overdone, and that much more needs to be done to revive the economy. Mark Hamrick, The Associated Press.